Hi everybody, welcome to another update on the stock screener. Today we're going to look at Westgold Resources. It was an Australian miner, which I don't cover because I can't buy it. But due to the acquisition, now I have no excuse anymore. It's on the Toronto Stock Exchange, so we need to take a look. This company has bought out Gora Resources. I still have that sheet here. So this is Gora Resources, and you can see its fair value. No upside at all for this company. Not a bad mine, a lot of mine life. And now we are going to look at Westgold. Let's see what they have. So there was a merger with Gora. Shares outstanding 943, so we can use that. So market cap 1.8 billion. Okay, 1.8 billion US dollars. Let's take a look at the financials. Where are the financials? Here are the financials. Current assets as of June, 324 million. Minus 324. Then liabilities, 361. Okay, 361. Which means they don't have any net debt. Okay. On to interest payments. Finance costs. It says 4.6 million. Okay. 4.6 million. Let's assume it goes down. I don't know how much, but just a quick estimate. Tax rate. 40 divided by 136. 30%. Investing activities. About 260 million. Could go up or down. But let's say, yeah, total capex 260 million. Okay. Mineral reserves or reserves 13 million. So these are the operating mines and a lot of projects in development. I hope they give guidance for the next years, because I don't want to do too much due diligence. So production 200. Let's just take this guidance, 400,000. Here it was 200,000. AISC 1, let's say 1,500, and here 1,400. I expect this to have a lot of mine life, let's say until here. At least 400,000 production. $13 million divided by 400,000 is 30-year mine life. Yeah, this is a very big mine. Okay, I have given 15 years for now. How much was Gora? Gora was 2043. Which means I should extend it at least until here. Voila, 2.8. And why is it 2.7 here? We should add and 2.8. Growth capital 157 million. That's growth capex. And here it was 105. Depreciation. Where's the depreciation? Um, I mean, depreciation should be this plus this. So 140, 130 million. $130 million. Yeah, 137 million. Of course, this was at 200. Now it's probably double. So let's take this times 2. For a 400,000 producer, yeah, that's possible. A normal capex for this kind of company should be 10x Soma Gold. So 150 or 100. Let's say 100. Let's start with 100 million. That should do it. Could be lower. See, exploration is already 33 million, so they will get to 100 million. I'm not going to add these things in it. Too complicated. Let's take a look at these mines. We have 2 million ounces of proven and probable. 2 million ounces. Not a lot, but they will convert resources, of course. Operating, non-operating. Yes, that's proven and probable. And resource statement says 4 million, 7 million. Yeah, 13 million of resources. And what's the grade? The grade is 1.8, 1.5, 2.73%, 3 grams per ton. Okay, these are good grades. Yep. Okay, so do we have everything? If this stays stable at 400,000, I don't know, they didn't give guidance, so I assume that this stays the same. Capex around 100 million, all estimates. Net income 300 million. They have a debt of 300 million, so I think they can pay off that rather quickly. So let's say like this. Yeah, it's difficult. I can't see the future. They don't give any guidance, so I'm not going to do too much due diligence on that. 200,000, 400,000. Let's assume it stays the same. 1,500, 1,400. And this is the situation. Pretty high enterprise value at 2,000. Okay, we're already at 2,700 gold. Okay. Here, so fair value actually, 5 times free cash flow, 6 to 5 times free cash flow. Actually, a pretty good buy. Yeah, a pretty good buy after the acquisition, merger. EV to free cash flow of 6 to 5. Yeah, I think there is upside, probably 10 to 20%. With these assumptions, of course. They do need to do more drilling to get resources into proven and probable reserves, because the reserves are only 2 million ounces. So this needs to go to here. They need to bring those projects online. It will take capex, I don't know how much, but this is the situation currently. Okay. All-in sustaining cost, pretty okay, 1,400. Let's say gold goes to 3,000. Then the upside is probably 50%. So not a lot of leverage. So 20% becomes 50% if we go to 3,000 gold. Yeah, it's not a lot of leverage. If gold goes down to 2,400, then it's fair value. Okay. I wouldn't buy it. It is not for me because there's not a lot of upside to me. But that was Westgold Resources. Gora Resources has no upside. So they merged. Now there is maybe a tiny bit of upside. Okay, I'll see you next video. Bye.